Vikas Khemani joins us live. He's Chief Executive Officer with Edelweiss Securities. Vikas, good morning and good to have you back. Because we've got hit hard in last 4 or 5 days. Nifty has lost more than 3%. We are down more than 200 points from the recent high. Is the party over?
I think Nikunj, after such a sharp rally, I think this kind of consolidation bound to happen, given the fact that I think still on the ground action is yet to be seen, or improvement in data is yet to be seen. And secondly, I think from international side, there again talks have been sort of resurfaced on the QE taper. So I think these two factors are right now sort of putting market in a sort of corrective or consolidation phase. And I think after such a sharp rally, it is always sort of expected. So I think we are in that phase. And I would tend to think that, given the fact that this month there are not many triggers, I think, next trigger is only in form of, state election outcomes. And I think that would probably bring some more, sort of action to the market. But I think, there are no major triggers at this point in time. And the international news flow also sort of slowing down the flows towards the market, which was driving the market way up. So I think, in light of this, I will think that, markets will sort of consolidate around these levels. And maybe, if the rupee continues to depreciate the way it has in the recent past, and I think one has to see how sort of where it finds some sort of support, or how low it can go. And if it continues, then the worry of the interest rates further going up, and again I think banking system taking a lead in terms of correction could also creep in. So I think now one has to really see how this risk off around based on QE taper, what kind of noise level it makes across the emerging market. And I think that would be a critical factor to decide in terms of short-term movement what is going to happen in the market.
So Vikas, do you think the market will now sort of step into a corrective phase, as has been the case post-Diwali? Or do you think this is just mere consolidation and we would bounce back in a day or two?
No, I don't see the kind of correction or kind of panic which we saw last time when the QE taper sort of noise was there, because I think this time around preparedness and sensitivity of the market is definitely better than or far higher than what it was last time. So I definitely do not see that kind of panic sort of settling in. But at the same time, I also don't see, as you mentioned, that in the next couple of days market to recover, because as I said, this month there is no major trigger in terms of liquidity for liquidity to resume. So I think we have next week FOMC minutes coming out. We'll get some more color in that. Plus, I think next decisive sort of move, in my opinion, will, from a flow perspective, liquidity perspective, we'll get to hear only when we see some trigger either in form of local issues or on the QE taper. And I think QE taper unlikely will get any clarity according to me, and this will keep market fairly sort of volatile according to me, because I think every now and then, based on various kind of data which comes from various developed markets, will definitely create various hypotheses and market opinions, and that according to me would keep market volatile. Anything happening, the action on the QE taper would only happen probably next year, in February, March. So I think till then market will remain sort of keep guessing what is going to be the direction, and I think any data coming out will sort of create various hypotheses, and hence I feel market will remain volatile. Also we have local event in terms of state election, that also will keep market volatility high. So I think we are in a fairly going to be in a fairly volatile sort of zone for some time.
When you say volatile, do you think at the top we are going to remain intact at 6250, or there is a case wherein we could see much higher levels than that?
I would not think, and the top would be, breached in any time in a hurry, at least till the time one gets any sort of clarity on the QE taper. I think state election definitely, let's say, assuming that there's a mood which comes out in favor of ND or something, markets would definitely cheer that. But will it be decisive in terms of taking and breaching the previous highs or the recent highs? I have my doubt, because I think you will need huge amount of liquidity support, huge amount of flows to come in, and flows I think will only come in, once the sort of there's a clarity chunky flows will commence. There's a clarity on the QE front, which of late I have, based on our interaction with the investors, we've seen of late investors have gone slow. Investors have been very cautious in terms of putting in, very significant amount of money. So I think those talks are back. Until then, I guess liquidity would be sort of tentative or will not be very major driving force. And hence, I feel that, probably, you might not test the, recent highs in any time in a hurry.
I want to just take a quick detour and talk about rupee once again, because rupee is down for the 5th day on the trot. And even though the global setup is not all that scary, at least this Tuesday morning, the decline clearly continues for Indian currency. You could blame it on global adjustment, on fear that tapering could be advanced or simple profit booking. The bottom line here is that rupee now is trading way below 63, and it is now threatening to go below 63.5. Because do you think we should not worry about foreign flows? Because in the month of August and September, when the economic condition for India was scary, we saw moderate outflows. And if I look at the behavioral pattern of what foreigners have done in Indian equities, they have bought into Indian equities irrespective of the environment.
No, I think, see, there have been, reasonably good buyers in the Indian equities, and based by largely, I think, after the QE worries in the last time got over, I think we saw significant amount of ETF flows coming, and I think in that we saw a fairly good amount of money coming in, and I think that was what drove the market from 5,400 levels to 6,000 levels. And I think, the question is that whether that will continue or not. And I think one has to and so far they have been, I think, continuously buying in India. We have not seen a major outflow in Indian equities. So I think the multiple hypotheses one can make about it. One hypothesis which is there, I think India still, offers from a long-term, perspective risk-reward. Given the, I think this is sort of next 6 to 8 months there is uncertainty, but from a longer-term perspective, India offers a good risk-reward, good equity environment, and I think some amount of equity ETF flows and equity flows, and India ends up finding larger proportion in the ETF flows in the emerging market basket than as compared to other nations. I think China has been going slow, Brazil has been going slow. So I think most of the large part of the allocations ends up coming to the Indian markets within the emerging market basket, and India has been beneficiary of that, and we hope that it continues to remain that. Should that not happen, I think definitely there will be pressure on the currency, no doubt about it. And I think also not to say that while numbers have been improving, but still structurally we have to see how we address our current account deficit. It has been improving, export data has been improving, but I think it takes time for industry to adjust, new capacities to come, and trade to adjust. So I do hope that in next 3 to 6 months our export really become robust, and I think some amount of improvement happens on the current account deficit for us to sort of be less dependent on the portfolio flows. Because I think more you are dependent on portfolio flows, it remains very susceptible to kind of volatility and tentativity which we have seen in the past.